Last week, McDonald's stock fell almost 10% because of a food poisoning outbreak across their US restaurants, and it got my attention. If you've watched my channel from the earlier years, you might actually know that I've spent a good amount of time studying restaurant stocks specifically because I have a good portion of my wealth invested in one. And one thing that I noticed is that investing in restaurant companies during a food poisoning outbreak has been incredibly profitable. Chipotle Mexican Grill faced numerous E. coli, Salmonella, and other outbreaks from 2015 to 2018. And while its stock initially fell 66%, it's risen more than 10 times in value since then. And we see this with other restaurants too. The 1993 Jack in the Box E. coli outbreak that recorded more than 700 illnesses, an initial 70% stock decline was followed by rising 500% in 5 years. Also, I think it's safe to say that McDonald's, which was also affected by the same outbreak, bounced back pretty well too. A lot of the reason why this trade has worked can be found in understanding the psychology of consumer behavior, but it's also much more than that. These events expose the limitations of big money managers whose trades dictate much of the stock market, and also the strategies fast food chains use to bounce back. This is the CDC's investigation into the recent food poisoning outbreak at McDonald's restaurants. It was launched on the 22nd of October, and within minutes, tens of billions of dollars in value was wiped off the iconic fast food chain. It details their findings of many people getting sick after eating at McDonald's, all of them infected with E. coli. It's a type of bacteria commonly found in the lower intestine, and while most strains of the bacteria are completely harmless, some are pathogenic and can cause serious food poisoning and even death. I'm not going to claim that I have a deep understanding of the science behind this, but there's basically a bunch of different types of E. coli, distinguished by something called a serotype, and this particular strain is called E. coli O157H7. If you ingest the bacteria, you'll likely experience symptoms within a few days: stomach cramps, high fever, vomiting and diarrhea if it's a severe case, and in very rare cases, it will require hospitalization. One of the cases from this outbreak is a person who developed hemolytic uremic syndrome. It's very serious and can cause kidney failure, and in rare circumstances, even death, although this person is recovering. The outbreak actually started back in late September, but because it takes 3 to 4 weeks to determine whether someone actually fits into this specific cluster, we're only hearing about it now. This number might be outdated, but as of right now at least, there have been 90 cases of E. coli. Most of them in early October, again because more recent cases haven't had time to be added to the investigation. That might not sound like a lot, but it's actually quite a large number for these kinds of outbreaks because most people don't get tested. They only get tested if they're really, really sick. Of the 90 cases, there have been 27 hospitalizations and even 1 death. The cases are also all across the US, 13 different states, with Colorado, Montana, and Nebraska being the most affected. The spread of this outbreak all across the country immediately indicated to the CDC that it was likely coming from a supplier. The people who contracted E. coli were interviewed, and of the 62 people questioned, most of them reported eating a beef hamburger, such as a quarter pounder, which narrows it down to a couple of ingredients. Beef patties can carry E. coli, and they were initially recalled just as a precaution, but McDonald's has pretty strict cooking standards for their meats, and once cooked properly, then the beef wouldn't have E. coli. The bacteria would be destroyed. There was one other ingredient that looked like a likely culprit: the onions. The slivered onions supplied by Taylor's Farms are only used in a couple of menu items, and they're always uncooked. So if they were contaminated with E. coli, it would be served to the customer that way. Taylor's Farms voluntarily recalled their onions pretty much immediately, and they were also recalled from McDonald's restaurants. But back to the stock, it fell a lot as soon as the news broke. And it fell because institutional investors, the big hedge fund money managers, think there will be a financial impact from the event. Just from an intuitive perspective, if you have national news across the country of many people getting sick and in one case dying from eating at these restaurants, that's something that can stick around in your head for a little while. You're probably not in any rush to go out and order a hamburger anymore. And when you extrapolate that effect across thousands of restaurants, you could be talking about many millions or even billions of dollars in lost revenue. But we don't even need to rely on intuition, because there have been many cases of food safety scandals at lots of different restaurants and some publicly traded restaurant companies. The most egregious example in recent times is Chipotle Mexican Grill. They were just hit with the largest FDA fine for food safety violations in history, $25 million for the outbreaks that occurred between 2015 and 2018. The Mexican food chain has about 3,000 stores across the US. And while obviously different in many ways, they actually have a lot of links to McDonald's. Starting in 1998, McDonald's invested $340 million in them, back when they had just 13 locations. And Chipotle modeled many of their operational features from McDonald's. They have large-scale processing hubs called commissaries where they prepare most of the meats. For example, they braise different meats at these hubs so that the ingredients are ready to be served once they hit the restaurants. But the downside from a food safety perspective is that the meats are kept heated for very long periods of time. So if there's a bacteria contamination, it gets delivered to lots of locations all at once. And some of these outbreaks are absolutely ridiculous. In August of 2015, there were 234 cases of E. coli at a restaurant in Simi Valley, California. That same month, 17 Chipotle restaurants in Minnesota had cases of Salmonella, more than 100 victims in that outbreak. Another E. coli outbreak a few months later spread to over 13 states, causing 43 Washington and Oregon restaurants to be closed. Then it was norovirus in Boston, 141 cases in December. Norovirus again in 2017, 135 cases in Virginia. And last but certainly not least, Chipotle had over 640 cases of Clostridium perfringens in a single week in 2018. The FDA found more than 1,100 cases of food safety incidents in 3 years, so it should be no surprise that there was a massive financial impact. The stock peaked at around $15 per share in August 2015 and fell to $8 per share by early 2016. Their financial results for the last 3 months of 2015 showed a 14.6% decline in comparable restaurant sales. Quote, "The decrease in comparable restaurant sales was due to publicity during the quarter surrounding foodborne illness incidents associated with a number of Chipotle restaurants. In the next quarter, it got worse. Comp sales declined 29.7%, primarily as a result of a decrease in the number of transactions in their restaurants. By the middle of 2016, it was becoming very clear that these numerous food safety outbreaks was having a meaningful impact on Chipotle's reputation. Sales at restaurants fell another 19% in the second quarter, followed by nearly 22% in Q3. Unsurprisingly, the stock continued to fall in 2016, reaching $7.40 in December, more than 50% below its previous peak. It was in December that sales finally stopped falling. Q4 2016 results did show a 4.8% decline in sales compared to the previous year, but in the month of December specifically, sales rose almost 15%. While this was good news, company-wide profits at Chipotle had fallen a shocking 95% in a single year. And the stock also wasn't finished falling. The end of 2016 was the moment where Chipotle started at a business level to recover, with customers finally starting to come back. But the stock continued to fall until reaching a bottom of $5 per share in early 2018, down 66% from its pre-outbreak peak. And it's in this moment that we can see one of the biggest reasons why investing in restaurant companies during a food poisoning outbreak has, at least in the past, been very, very profitable. Like many stocks, Chipotle stock is almost entirely held by institutions, and much of that holding is in actively managed funds. So when a stock declines rather violently, it's largely a reflection of investment professionals deciding to reduce their exposure to the company or even exiting the position entirely. They're not selling because they think one of the most popular and fast-growing restaurant chains in the US is going to die because of some food safety problems. And for the most part, they're not even selling because they think the value of Chipotle is now 50+% less than before. They're selling because suddenly the next few quarters look very uncertain. Even in 2017, as the company returned to growth, Chipotle was dealing with more food poisoning outbreaks. So it wasn't out of the question that Chipotle may face some more large declines in quarterly revenues and profits. At this point, if you're a logical person, you might be wondering, why does a few quarters of performance matter? And the truth is, for the long-term value of the company and where it's going over the next couple of decades, it doesn't matter. But what it does affect is the portfolio manager's return over the next year. That 1 year return dictates how many new clients put money in the fund, how many existing clients withdraw money from the fund, and ultimately how much the fund collects in fees, the portfolio manager's income. The point being that the incentives for institutional investors are completely different from an individual investor. If I have strong reasons to believe that the company will return to growth after the food safety concerns are gone, and that the stock is worth a lot more than its current price, what do I care if it bounces around for a couple of months or years before eventually reflecting that value? After bottoming at $5 per share in early 2018, the stock recovered to a new all-time high within 18 months. And today, the stock sits at $58 per share, more than 1,000% higher than its low. But this recovery certainly wasn't a given. There's really three elements that had to line up for Chipotle to be a great food poisoning investment. Looking at McDonald's today in the wake of their outbreak, they likely hit two of these elements, and just as likely missed the third critical one. Firstly, Chipotle had to find a way to stop these outbreaks from happening. In late 2016, one of the co-CEOs left the company, and not long after, Chipotle's founder and CEO also stepped down, replaced by Brian Niccol, who had served as Taco Bell's CEO. The company installed brand new food safety protocols, they increased paid sick leave for staff, and they launched a new marketing campaign overseen by a new chief marketing officer. It did take quite some time, but eventually the changes stopped these outbreaks from happening. The current McDonald's E. coli outbreak may not be the last issue in the short term, but the company has some of the best systems and protocols for food safety of any restaurant chain I've seen. So it's a reasonable bet that large food safety incidents are not going to become a regular occurrence. But ultimately, what drives customers back is a lesson in consumer behavior and branding. Immediately after an outbreak, the fear and disgust of potentially getting sick outweighs any previously built brand reputation. But if the brand has a long-standing reputation, then as time passes, the scales tip back. This is at the core of why McDonald's has recovered from numerous food safety scandals, while a local restaurant can be permanently destroyed by a single event. Word of people getting sick at a restaurant spreads fast, and if you don't have any other memories to associate with that restaurant, you may never go back. But even if someone tells you that they got sick at McDonald's, it's one negative point against the many positive experiences and advertising conditioning that's stacked over many years. Again, in the short term, you might steer clear, but eventually you'll probably come back. I'm talking in generalizations here. Obviously, there are heaps of people who have had very terrible experiences at McDonald's. But there's one other really important element that has made Chipotle and other restaurant stocks in the past great investments during food poisoning outbreaks. At the time of the outbreak in the mid-2010s, Chipotle still had an enormous growth tailwind. They had around 2,000 locations, which is a big number, but pales in comparison to the 13,000 McDonald's locations. And that's just in the US. If you look globally, McDonald's has about 36,000. The average Chipotle restaurant was doing around $2 million a year in sales, also meaningfully below McDonald's locations, and that's before they'd even ramped their drive-thrus and delivery services. Chipotle has more than doubled their revenue since the outbreak, and while some of this is of course from recovering lost customers, most of it is just from accessing brand new customers in markets where they didn't have restaurants before. McDonald's today doesn't have this tailwind. They've already experienced the vast majority of their expansion. That's certainly not to say that they can't grow from here, but the path forward isn't as obvious as Chipotle in 2015, which is to say that every situation is different. So from an investing perspective, you have to treat each investment uniquely. If you enjoyed the video, it would mean a lot to me if you could hit the subscribe button. It's a free way to get YouTube to occasionally show my videos on your homepage. And here's a couple other videos that I think you'll enjoy.